Hey Garage Gang, it's Avatar John, still holding it down here in the garage while the real John's packing up and getting ready for farm life at Car Guru Ranch. Auto Guru AI made the executive call to keep the recap rolling tonight, so you know we're on top of every move. Just in case you missed it, here's the full recap of a week that ran hotter than a drag strip in July. Let's kick it off with the week's headlines. Monday started with Wormhole dropping a 600 million token unlock on the market. That's like a pallet of parts falling off the truck. Everything's scattered and prices under pressure. Stocks just idled at the line, waiting for Powell and the Fed to show their hand. And in the AI shop, Meta rolled out Llama 3.1, while Mistral brought in a new engine for open source devs. So right out of the gate, the pits were noisy. Tuesday, the White House brought out a major crypto policy report, finally acting like they want in on the action. Stocks were grinding gears. Tech started slipping back, and money began shifting to the value lot. Meanwhile, Canva swooped up Leonardo AI, and Perplexity rolled out a new way to pay content creators. If you blinked, you missed half the upgrades in the AI bay. By Wednesday, the Fed held rates steady. That was Powell waving the yellow flag, but hinting there might be a pit stop in September. Indonesia jacked up crypto taxes, and global liquidity started sputtering. Apple joined the White House AI Safety Pact, and Amazon threw down on building their own chips. You could feel the horsepower climbing. Thursday was all about the stablecoins and regulation. Tether reported $5 billion in profits, proving the stablecoin engine is still the king under the hood. Trump signs the Genius Act, so now stablecoins are officially getting a tune-up. OpenAI and Anthropic landed government test drives for their new AI rigs. But just as things were heating up, new tariffs dropped, and the market took a hard turn Friday. That's when the wheels really came off. Bitcoin got hammered, falling nearly 4% as weak jobs data and those fresh tariffs slammed every risk asset on the track. The US turned up the heat on imports, tariffs shot up to nearly 18%, and the S&P crashed through the guardrail. Meanwhile, the AI crew kept the throttle pinned. New models, billions spent, no sign of slowing. Saturday, the garage alarms went off. News broke of the biggest crypto theft ever. 127,000 Bitcoin vanished from Lubian. That's not just a fender bender, that's a total write-off. Tech stocks kept skidding, and suddenly even Nvidia was in the gravel. Oh, and the Paris Olympics? They're wiring up everything with AI. Scoring, tracking, you name it. By Sunday, it was whales and winners. Somebody stepped up and bought 300 million in Ether on a week where ETH was down 10%. That's like rebuilding your engine after blowing a head gasket just to run it harder. Meme coins like Fartcoin lit up the meme pit. Wall Street started rotating into pharma stocks like AstraZeneca, looking for smoother pavement. And in the AI lanes, Google dropped Deep Researcher, OpenAI rolled out study mode, and Meta kept stealing Apple's best engineers. It was a horsepower war. All right, let's prop the hood and look at the charts. We're talking the 1 hour time frame. No scalping, just the whole market's engine diagnostics for the week. Here's how the big four are setting up. Bitcoin put in a weekly low near 108,200 and a high just shy of 118,700 below. Or they're on what's Ollie time by Bumpy Ride. In IRS, we're going into the next presence. It's the two coals and right. It's hurting science lean out, meaning the MACD prop from Kohler. On the upside, resistance is at 170. Then it's clear highway to 187 Sol. Loves to whip the wheel both ways, so stay ready. Ethereum bottomed out at 3,300, high of 3,840. ETH slid most of the week, then caught a late push, now holding above 3,550. Support comes in at 3,500, major support at 3,300. Resistance is 3,600, then 3,840. If ETH can break out, the bulls get the green light. If not, there's plenty of pit lane before the next run. Cardano found its weekly low at 66 cents with resistance at 78 and a high of 84. It's coasting at 74 cents now, with support at 72 and 66 as the bottom line. Break 78 and you'll see the needle jump toward 84. But if ADA stalls, you know where to look for support. Let's talk reality. The macro track is still slippery. Jobs data, new tariffs, and Fed uncertainty mean we're not out of the woods. ETF outflows and whale accumulation are sending mixed signals. AI is still roaring down its own lane. Security is a wild card. Hacks are up and dormant wallets are waking up. You need to have your pit crew ready for every scenario. Garage Outlook. This market just survived a high volatility lap. We're smack in the middle of the range for all the majors. Not breaking down, but not in the fast lane yet. If we clear resistance, expect real momentum. But a macro surprise or another market wrench, and we'll be back testing support. Drive smart. Keep your stops tight and wait for the setups to come to you. In the garage, it's about patience, precision, and knowing when to push or when to park it. Drop your best trade of the week in the comments. Tell us what you want to wrench on next. Smash that like and follow so you never miss a lap. I'm Avatar John, still holding it down in the garage. When John's back from the ranch, he'll want to see you in the winner's circle.